Do you want to create wealth by investing in real estate? What about infinite returns on your money by owning apartment buildings? Hello, my name is Ruben and I love real estate. In this video, I'm gonna show you using a real case study how to create this infinite returns. Our company RMDR Global is the general partner on these investments with investors partners. Let me ask you, why invest in real estate? Well, to begin with, if it's a solid investment in something that is tangible, is real, and it exists, you can go and touch it. You get better returns than the bank and than the stock market. You get your initial investment return in a period between 3 to 5 years. And a good one is that is hands-off investment. Why? Because we, as the general partner, we do all the work. We are invested with you. We have professional management on site. We have a complete team on the ground. And best of all, we have a proven process with proven results illustrated on this cycle on the right side. The portfolio that we are owning and managing now includes 143 revenue units in a combination of apartment buildings, a multi self-storage unit, and a single family house, which is the site of a new project for an apartment building very soon. All of these are located in southwestern Ontario. So this is the property for the case study, 747 Indian Road in Sarnia, Ontario. Where is Sarnia? Sarnia is one of the busiest crossings between Canada and the US. It's located on the shores of Lake Huron, and it has around 100,000 people population. So let's talk about this building. This is a 22-unit row townhouse with 3 levels. It contains 14 units with a 2-bedroom and 8 units with 3 bedrooms. It was purchased on September 2016 at 1.35 million purchase price. So what was the challenge? The challenge was to reposition this building to increase the value in 3 to 5 years. And in order to reposition a building in 3 to 5 years, there has to be a strategy to follow. And we have a very simple and solid strategy that increases the value of the building. Any building, the main number to increase is the number called net operating income, which is all the income minus all the expenses, not including the debt or any loan or any financing. So in order to do that, we have to renovate to this quality that you see on these pictures after every vacancy. When any tenant leaves, we come in and we do this kind of work. So that allows us to increase to market rent, and sometimes more than market rent, but it will average between 10 to 20% increase. At the same time, on the other units that are occupied, we increase the rent annually per the guidelines of the province. We also offer a washer and dryer set, and we increase the rent for $50 a month, which also increases the value of the building. We have effective property management from our headquarters and on the ground in Sarnia. And best of everything, we got systems everywhere, from acquisition to onboarding to refinancing to managing the property. Let's talk about the numbers. After 3 years, this building was refinanced complete in November 2019, which is just short, a little bit more than 3 years after acquisition. So let's talk about column 1, which is the year 0. When we purchased this building was operating with a gross income of $230,000 roughly, with an NOI of about $62,000, and there was an original capital that has to put in for down payment and closing costs of $493,000, and the bank financed it for $1 million. So the cap rate estimated at that moment was 4.6%. So the plan was that after 5 years, in 2021, we will increase the rent, we will increase the operating income to about $260,000, we will increase the NOI by controlling expenses to $96,000, and the property value will increase to $1.7 million. I'm not gonna go into the details how the property value increases, but it's basically dividing the NOI by the local cap rate, and it's a formula to apply that. So the balance estimated by us was about $857,000. So we were estimating that we will be getting about $419,000 cash in the bank after the refinancing, and that we will produce around $137,000 cash flow. Cap rate about 6%, and estimating return of the original capital was about 78%, to a cash on cash return of 5.5. So I just went through all of those numbers just to show, to illustrate. Now on 2019, what happened? The rental increase average was about 16%. The gross operating income was $276,000, so more than what we estimated in 5 years. The NOI increased by $105,000, and the property was valued by the bank and CMHC at $1.843. That gave us a refinancing balance after the refinancing of $612,000. This is cash in the bank. But at the same time, the property paid in cash flow a cumulative of $93,000, which positioned the building at 7.5%. What happened after 3 years? With this refinance balance in the bank, we were able to return 100% of the money to the investor. This is a very special case to be achieved in 3 years, but it was done. So the cash on cash return was 6.4%. And why the return on investment after refinance is infinite? Well, because now the investors, they don't have any money invested in this building, and the building is cash flowing. That's how a return on investment can be infinite, and the ownership is still there. The building hasn't been sold, and is cash flowing much better actually now. What is the future of this building? We will continue to stabilize the cash flow because we continue with the same strategy. Nothing has changed. Every unit is being renovated. If the new tenant wants a washer and dryer, we add it. We continue improvements. We continue adding video surveillance and increasing the NOI by managing the expenses very efficiently. Now we will distribute excess cash flow on this building on a yearly basis. And the good thing is that after 5 years, we will have the option to refinance again or sell the building. And now we have all fun and enjoy the hard work. Conclusions of this case study. The ROI estimated was about 33% per annum. The new ROI is infinite, as I explained, because there is no money invested in the building, and this is the real way to create wealth. The value of the building increased by an average of 9% per year. The investors are happy and they continue ownership. And all of these is proven because the RMDR process works every single time, and we repeat in every building. So who is RMDR Global Enterprises? This is a company that is your partner in real estate investing. my wife Mary Lou Aguilar and me, we are the principals. This is our contact info in case that you want to expand having a one-to-one meeting online or in person. You can send us an email to get a copy of this presentation, or you can also contact us. So this is a real example that I illustrate in here to show you the power of real estate investing. So call us, go to our website rmdrglobal.com, and we can meet anytime to explain and expand and help you create wealth for you and your family. Thank you.